Hey everyone, and welcome back. So lately it seems like all anyone can talk about is the euro and how much it's been dropping. And that $1 mark, it's getting closer and closer. Kind of feels like a big question mark hanging over everything.
Yeah.
We're going to take a deep dive into an article from CNA Today to really break this all down. The article is called "Why is the Euro Falling and Could It Hit $1?" And some of the questions we'll be looking at today are, could a U.S. election really impact the European economy? And, is all of this just doom and gloom? Or are there maybe like some hidden opportunities in all of this currency chaos? What do you think? Ready to dive into this with me?
Let's do it. Yeah, for sure. It's been a wild ride for the euro this past year. We're talking a one-year low, down 5% since September. And yeah, that $1 per euro mark, it's definitely making some people nervous.
Okay, so let's just get right to it. Could the euro actually hit $1? I mean, it sounds kind of crazy, but is that a realistic possibility?
Well, I mean, it's not impossible. I mean, think about it. We're only 6% away from parity. And the euro has actually already dipped below $1 a couple of times, once back in the early 2000s and then again in 2022. So historically speaking, it's happened before.
Yeah, and that's what I find so interesting about all of this. It's not just about the numbers. It's about like the psychology of it all, Like when the stock market hits a certain number and everyone just starts reacting. It's the same kind of thing here. But I guess my question is, what could actually cause the euro to fall that far? Like, what would push it over that edge?
Well, the article mentions a few key things. One of the biggest ones is the possibility of increased tariffs between the US and the Eurozone. And when we say tariffs, we're not just talking about simple taxes on imported goods. It's more about the ripple effect that tariffs can create.
Okay, I'm listening. Break this down for me. Explain it to me like I'm 5 years old. Because I always get a little confused when it comes to tariffs.
Okay, so imagine you're an investor and you're trying to figure out where to put your money, right? And you see all this tension between the US and the Eurozone, all these tariffs. It's got to make you hesitant to invest there, right? You're probably starting to question how stable the Eurozone economy really is. And then suddenly the US market is looking way more appealing, safer. And that's what really impacts currency the most, that shift in investor confidence.
Oh, okay. I see what you're saying. So it's not even just about the goods getting more expensive because of the tariffs. It's more about spooking investors and making them pull their money out of the Eurozone.
Exactly. And on top of that, the article also talks about potential U.S. tax cuts. Now, you might be thinking, what does that have to do with the euro? But it actually all comes back to that idea of making the U.S. more attractive to investors, because if those tax cuts end up stimulating the U.S. economy, then the dollar is going to become even more valuable. And that strength in the dollar, it can lead to weakness in other currencies like the euro.
Got it. So it's like this big seesaw. One goes up, the other goes down.
Right.
Okay, but let's talk about what people really want to know. What does a weaker euro actually mean for the average person? What does it mean for me, for you, for the person listening to this right now?
Well, let's think about it in terms of imports and exports. So let's say you're in the market for a new car and you really want to get one of those really nice European cars, like a BMW or something. A weaker euro actually makes that car cheaper for you because the company that makes the car, they have to lower their prices. They have to adjust their prices so that they can still be competitive in the U.S. market.
Okay, so maybe I can't afford that European vacation with the weak euro. But hey, at least I can get a fancy car for a lower price. Not bad.
Exactly. But on the flip side, that brand new US-made phone you've been wanting, that's going to be more expensive for someone living in Europe because their money just doesn't go as far anymore.
Oh, that makes sense. So it really is a mixed bag, depending on where you live and what you're buying. But this makes me wonder, is the euro the only currency that's struggling right now? It feels like every time I read the news, some currency is crashing.
You're right. The euro isn't alone in this. The article mentions the Mexican peso and the Korean won as other examples of currencies that are being negatively impacted by all this talk about tariffs. I mean, global trade is so interconnected. When one currency starts to weaken, it puts pressure on others too.
This is making me think about what happened during the last U.S. administration. Because the euro actually did pretty well during that time, but then right after the election, it dipped. And now it seems like it's happening again. It's like this weird economic echo. Is there a connection there, or am I reaching?
You might be onto something. The article actually mentions that similar dips happened after the last election as well. And to give you some more context, the Japanese yen has actually dropped even more than the euro this year. It's down almost 9%. So clearly, there's a lot more going on here than just what's happening with the euro. It's this whole intricate dance of global currencies and investor sentiment.
Wow, yeah, it's a lot more complex than I initially realized. But before we all spiral and start thinking the world economy is about to collapse, is there anything in all of this that makes you feel optimistic? Like, is there any reason for hope?
Yeah, definitely. There are a few potential things that could really help the euro. One possibility is that the European Central Bank will decide to cut interest rates. And if that happens, that could really help stimulate economic growth within the eurozone, which could make it a more appealing place for investors again.
Okay, I see what you're saying. So a stronger Eurozone economy would hopefully mean a stronger euro. But isn't Germany, which is like the economic powerhouse of Europe, going through some political stuff right now?
Yeah.
Could that mess things up?
You know, that's a good point. Germany's political situation definitely adds another layer of complexity to all of this. But the article actually suggests that if the new German administration ends up spending more money to help boost the economy, that could actually have a positive effect. It's all interconnected.
That's interesting. So even with all this uncertainty, there's a chance things could turn around. It sounds like it's not just a simple case of the euro is doomed, but rather a very complex situation with a lot of moving parts.
It really is. It's all about how you look at it. You
Yeah.
know, like some people are seeing this and thinking it's all bad news, but other people, they're seeing a potential upside to all of this. The article actually quotes this guy, Benjamin Mellman. He's the CIO of Edmund de Rothschild. And he basically says that there could be some positive surprises in store for the European economy in the next few months. He doesn't think that the euro is going to crash or anything like that.
Okay, that's good to hear. So it sounds like we're not necessarily headed for like a euro apocalypse or anything, but more like we're in a period of adjustment and, there are risks, but there are also potential rewards. It makes me wonder, though, what is the European Central Bank thinking about all of this? Are they like freaking out or are they pretty calm about the whole situation?
That's a really interesting question because the article mentions that the ECB actually seems less worried now than they were back in 2022,
Wow.
back when inflation was so high.
Wait, really? That seems kind of counterintuitive. Why would they be less worried now when the euro is doing so badly? Help me understand this.
Okay, so here's the thing. The ECB, they don't just focus on how the euro is doing against the US dollar. They look at a whole bunch of different currencies, like a basket of currencies.
Huh.
So they're also looking at the British pound, the Japanese yen, even the Chinese yuan. This gives them like a much broader view of how strong the euro is compared to other major currencies.
Oh, okay, that makes sense. So it's not just about the euro losing value against the dollar, it's about how it's doing against all of its trading partners. But what about inflation? Because I thought that when a currency gets weaker, it usually means that the prices of imported goods go up, and then that leads to higher inflation.
You're right, that's usually how it works. But some economists are saying that the connection between currency changes and inflation, it's not as strong as it used to be. So even if the euro keeps dropping, we might not see those same crazy price increases that we saw in 2022.
Interesting. So basically, the ECB has a little bit more time to figure out what to do before they have to step in and try to fix things.
Yeah.
But for our listeners out there who are maybe planning a trip to Europe or thinking about investing in European companies, what's the takeaway here? Should they be worried? Should they see this as an opportunity?
That's where things get really interesting. Because a weaker euro can actually make European investments more attractive to people who are investing from other countries. Like imagine you're buying stocks or bonds that are priced in euros. If the euro drops in value compared to your home currency, those investments suddenly become a lot cheaper for you, which means you could potentially make a lot more money in the long run.
Oh, I see. So there's like a potential upside for investors who are willing to take a little bit of a risk.
Exactly. It's like everything in Europe is on sale right now for foreign investors.
But isn't there also a risk that the euro could just keep dropping
Mm-hmm.
and then any potential gains would just disappear?
Yeah, you're right. There's always risk involved with investing. And currency risk is definitely something to think about very carefully. That's why it's so important to do your research and really understand what you're investing in. And it might even be a good idea to talk to a financial advisor who specializes in international investing.
That's good advice, for sure. But what about people who aren't investors? Like, what if someone was planning a trip to Europe next summer? Should they be worried about their travel budget?
It's definitely smart to be aware of the situation and to plan accordingly. If the euro keeps falling, your trip could end up costing more than you initially thought, but there are things you can do to protect yourself.
Oh, like what?
Well, one thing you could do is exchange some of your money now.
While the exchange rate is still decent, that way you lock in a certain rate and you don't have to worry about it dropping later.
That makes sense.
You could also look into travel insurance that covers currency fluctuations. Or you could just adjust your budget a little bit. just in case the euro does end up falling further.
Those are some great tips. So for our listeners who've been following this whole Euro story, it seems like the best thing to do is to just stay informed, be aware of the risks, but also be open to potential opportunities. It doesn't have to be all doom and gloom, right? Exactly. The global economy is constantly changing, and what looks like a crisis one day could turn into a great opportunity the next. I think the key is to just stay curious, keep learning, and use that knowledge to make smart decisions for yourself. Whether you're planning a trip, making an investment, or just managing your everyday budget, yeah, it's kind of like you're sailing a boat and you're not really sure what the weather's going to be like. You got to keep checking the forecast, adjust your sails as you go, maybe even change your route completely if you need to. But the journey itself, that can be pretty exciting.
I like that. That's a great analogy. So for our listeners who are maybe feeling a little bit lost with all this talk about currencies and economics and stuff, what's the one thing you would tell them to remember? What's the most important takeaway from all of this?
That's a good question. I think I would say the most important thing is to remember that knowledge is power. The more you understand about how the global economy works and how different things can affect your money, the better decisions you'll be able to make. Whether you're planning a vacation, making an investment, or just figuring out your budget.
That's so true.
Yeah.
It's easy to get caught up in all the scary headlines and just panic. But if you take the time to really educate yourself, it can make a huge difference. So today, we've talked about how vulnerable the euro is right now and how things that happen in the U.S. economy can have a ripple effect on the rest of the world. And we've seen that there are both risks and potential rewards in this constantly changing economic landscape.
Yeah, for sure. And I think it's important to remember that we're all in this together. The global economy is interconnected. What happens in one place affects everyone else. And by staying informed, being critical thinkers, and having open conversations like this one, hopefully we can all make better decisions and maybe even create a brighter financial future for everyone.
I love that. Well said. Well, that's all the time we have for today's deep dive. Stay curious out there, keep learning, and remember, there's always a new deep dive waiting for you right here. Until next time,